This is all about Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at 42,250 and change. Bitcoin sliding almost 3% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin continuing to take cues from equity markets amid macro uncertainty, seeming to contradict the popular narrative of BTC being a safe haven like gold. Bitcoin bouncing from this 6-week low of about $40,000 reached earlier today. Major European stock indices are also trading higher alongside weakness in the safe haven US dollar, despite lingering concerns about China's property market and its contagion risk for the global economy. Some experts are worried that an impending drawdown in fiscal spending could lead to an economic slowdown in the coming quarters and weigh on risk assets. According to the Wall Street Journal, the U.S. government could run out of cash and hit the debt ceiling between mid-October to mid-November. On Sunday, U.S. Treasury Secretary Janet Yellen renewed a call for raising the debt ceiling, warning that a failure to do so may trigger a historic financial crisis. All right, and one major narrative explaining the broader market retreat is centered on Evergrande, a hugely indebted Chinese real estate developer that appears to be on the brink of collapse because its debt is held widely in China and elsewhere. Evergrande could trigger much broader financial fallout if it defaults. And joining us now to discuss is Ming Zhao, entrepreneur and former analyst at investment firm Point72, based in the Bay Area. Welcome to the show, Ming. So just quickly off the bat, I want to get your outlook on Bitcoin as you see that Bitcoin, as well as the rest of the crypto markets and traditional markets, have been very much impacted by this news out of China.
Yeah, certainly. Well, I definitely think that, fears are at kind of a local max right now with respect to crypto and, its correlation with Evergrande. I think that part of the reason why the drawdown is because, Evergrande had wealth management products that it was selling to its employees and other retail investors in China. And considering how much these retail investors, hold in Bitcoin currently, it's kind of like what happens during a bank run. Like if, the wealth management products are selling off, they can't get their interest, they can't get their principal back. They're going to need the short-term liquidity from, and then what do they sell? They're kind of going to cash out via their Bitcoin holdings. So I kind of think, it's possible that this is a kind of a slight peak in fears right currently. And, I see a rebound in the coming weeks.
Is this a Lehman moment for China? Is this just or is it just the beginning of a collapse in Chinese real estate? Like, we know that real estate in China is a factor in huge economic growth for the country. So will this have a domino effect in the rest of the economy in China?
Yeah, that's certainly possible. So I've actually been looking more into kind of what the bailout situation probability looks like and what's been happening previously. And it does seem like, ever since 2008, and frankly, in the last 2 years, especially in real estate, we've had a lot of, banks that are state-owned or partly state-owned and property management companies that are partly state-owned. And, China has a history of bailing these guys out. But the way that they do that is by printing more money. And obviously that cannot be sustainable. And if you look at M2 supply for China versus the US, actually China has quite like double. Like we think that in the US money printer goes burr, but in China it's actually a lot worse. So, it's kind of like at a certain point there will be a last straw on the camel's back. And whether this is it or whether it's going to be the next one, kind of just let's wait and see.
And I saw that on Twitter, you wrote quite an explainer on Evergrande because there wasn't much information on Western media, so you went into Chinese media. I wonder if you could give us an explainer of the problems here.
Yeah, so I'm sure you guys have heard of the three red lines in China. So what that means is, about a few years ago, kind of the government looked at all of the over leveraged asset management companies and other financial institutions, and they said, you guys can't keep doing this. Like, this is not sustainable. So they had three conditions imposed on short-term liquidity. Basically, it's kind of cash to short-term debt, short-term interest ratio, and so they had three of these, and they said, if a lot of property management companies are kind of crossing all three of these red lines, and so really it's kind of like to find the details of their financials. A lot of them are not on Western media. China is not China, obviously not being a U.S. company, does not follow GAAP accounting, so their financial reports are not necessarily as easily Googleable as they are if you go onto Chinese media and then search using like Chinese characters.
I did see from your Twitter a poster showing China's top three most indebted real estate companies in 2020. Evergrande was number one. And so now they have this problem. What happens next? A lot of people in the country, are suffering because of a potential default. And this may happen as soon as today, I read, or Thursday.
Yeah, so it's kind of like, this is this the first of the dominoes to fall, and then what's after that? So the idea being, now that Evergrande is exposed, like how many other property management companies also have this wealth management product? Like how many others are also shadow banks, and how many others, are also trying to pay their employees with with bonds in lieu of salary, and then what? And if they do get bailed out, who's going to bail them out? Is it going to be the banks? Like, are they going to be the next line of defense? And if they fall, like they're also pretty levered. If they fall, what's going to happen after that? And it's kind of like right now, it's default is not even the problem; it's bankruptcy. It's like whether they miss their interest payments or not, which undoubtedly they will. Like
Mm-hmm.
it's not about paying back interest at this point; it's about paying back principal.
Right. In terms of the crypto markets, there are some stable coins, namely Tether, that have said that they do have their reserves tied to Chinese commercial paper. They've said that they're not tied to Evergrande. Nevertheless, if there is this domino effect, do you foresee some problems in the stable coin market?
Yeah. I think, obviously Tether has come out and said that they don't hold commercial paper from Evergrande. Uh, I mean, I think that's true. Like there hasn't really been solid evidence to say that to prove them wrong. So I don't see this having an immediate impact on Tether. I see if there is an impact in stablecoins, it'll be more at the macro level as like secondary or tertiary effects. So we already see like iron ore is going down, steel, copper, and so what you see in like commodities markets, it's emblematic of the fear that people have that the entire property market is going to go down in China, and it's more so like the fear and the macro instability that's going to spook stable coins, less so than any like direct impact.
Mm-hmm. Long term for the crypto markets, do you think this will have any impact, or is this a short temporary blip?
Well, I think it's not news that the the Chinese government has taken a stance, and they want order and they want stability and they don't want speculative gambling. The Chinese government has, since a few years ago, labeled crypto as speculative, and now they're trying to make real estate go from, speculative to non-speculative. And like, I think this is not news. Like, I in terms of crypto markets, like I think we've known since forever that the Chinese government is against this, and so crypto is going to continue to grow. Like, I think that there's so much utility from all the developments that are currently going on in Solana and Ethereum, And, the drivers of growth are not like, I think they're unrelated to this. So I think that, crypto markets will recover.
All right, Ming, thanks for your analysis on then as well as your perspective on China. That was entrepreneur and quant trader Ming Zhao. Coming up, we'll talk to Compass Mining about Bitcoin mining and more.
CoinDesk indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
As the company that launched the world's first ever Bitcoin ETF, we at Purpose chose the CoinDesk Bitcoin Price Index, the XBX, to price our assets.
CoinDesk indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. Taking a look at some of our top stories. A forum of some of the largest U.S. and European banks has urged modifications to rules proposed by the world's central banks and regulators for capital requirements on Bitcoin exposure. The Global Financial Markets Association, which includes JPMorgan Chase and Deutsche Bank, in a September 20th letter opposed the rules set out in June by the Basel Committee on Banking Supervision. And the U.S. government has sanctioned a cryptocurrency exchange for the first time as part of its ongoing fight against ransomware attacks. The Treasury Department announcing Tuesday it is adding Russia-based Suix.io to its list of, quote, specially designated nationals for its alleged role in facilitating cryptocurrency transactions for ransomware attackers, placing it in a category with suspected terrorists and drug traffickers. And joining me now to discuss Bitcoin and more is Whit Gibbs, CEO of Compass Mining. Welcome to the show, Whit. So as we see the Bitcoin markets again, I wanted to get your take on what your outlook as we see the big pullback yesterday and the market stabilizing right now.
Well, first and foremost, Christine, thank you so much for having me on. Bitcoin's price action right now, I think, is still bullish. When we're looking at it from a mining point of view, everything right now, obviously with ASIC price being correlated to the price of Bitcoin, is still very much in the uptrend. So from a miner's perspective, we're seeing this extended period of profitability. We haven't yet seen ASIC prices drop significantly to match this recent downturn in Bitcoin's price. So it's almost a non-issue for us so far.
Mm-hmm. And as a mining company, what are you doing with your newly minted Bitcoin in this declining market? Are you selling, or are you taking this as a buying opportunity?
So Compass Mining actually doesn't self-mine at all. Our entire purpose is to help other people mine Bitcoin. Most of the customers that we serve are small retail miners, and oftentimes they are the ultimate hodlers. These are people who are looking to get out of fiat and get into mining equipment and convert their fiat in effect into Bitcoin over the course of time, mining either in one of our 23 facilities around the world or now at home using the Compass at-home mining program.
Okay, fair enough. China has been in the news a lot. And earlier this year, there was a crackdown on mining, of course. And do you have any insights on where we are with the mining difficulty?
So difficulty continues to creep up, right? The Chinese ban and the exodus that we have seen of miners from China since June, it created this boon for Bitcoin miners who had hardware plugged in outside of China, created really this golden period of mining profitability. And now we are seeing some of these newer generation machines start to come online. Some of the Chinese miners who have been displaced start to find a home elsewhere and bring those machines back online. So hash rate continues to increase and the difficulty continues to increase. And we likely will see this continuation of difficulty and hash rate increases for the foreseeable future.
Has the hash rate moved to other geographies, or is it starting to rebuild again in China and elsewhere in Asia?
So this is an interesting thing. There is speculation that miners are coming back online in China, although the hash rate wouldn't dictate that much of this of the Chinese miners who had been turned off are now coming back online. But there was recently the news also that the Chinese government, the CCP, is going to create task force to find these miners who are, mining illegally, and we'll see what comes from that. But we are seeing Chinese miners come online in different geographical locations, namely Kazakhstan and in North America. China really has made a move to come to North America. We're seeing a big interest in Texas as well as in parts of Canada.
Yeah, that is interesting. Well, it's difficult to shut off the internet. All right, Whit, thank you very much for your time. Appreciate coming on. That was Compass Mining CEO
Thanks,
Whit
Christine.
Gibbs. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.